You could know technical analysis like the back of your hand. I mean, you could master supply and demand, support and resistance. You could know every single candlestick pattern that there is. There's hundreds. You could memorize every bit of that, every price action pattern, every single indicator that exists, and you could still come out of that as a losing trader. What's up, guys? My name is Steven, your honest trading coach, and at the beginning of my own trading career, I remember doing this. I put what little money I had into a trading account. It was about $1,500, and I went at trading based on luck, based on a gut feeling, based on emotions, because I wanted the life of my dreams, and I thought trading could do that, so I went after it. I took that money, I started placing trades, and once I was in a position, I would just hope and pray that that position went in my direction. If I bought a stock, I just hoped that it went up. If I sold a currency pair, I was hoping it would drop. And guess what happened? Over the next 3 weeks or so, I lost every bit of that account. That $1,500 was absolutely gone. And at the time, that was about 2 months of my rent that just vanished in what seemed like a blink of an eye. So with that being the case, I started learning technical analysis as much as I possibly could. And 6 months later, I know everything there is to know about technical analysis. At this point, I've mastered everything I just told you. I've mastered supply and demand, support and resistance. I've mastered trends. I've mastered where to put my stop and target, how to enter the market based on candlestick patterns. I know it all. So after those 6 months of learning technical analysis, I jump back in the market, another $1,000 account. About a month goes by before yet again, I lose the entire account. So a lot of us come into the markets, including me, as I just told you about in that story, hoping that this is going to be something. Trading will be something that maybe gets us out of some position we're in life, or puts us on the path to the life that we want, with the car we want, the house we want, the people we want around us. And because of that big dream that we have, we go in and we trade based on luck. We just hope and pray that the market goes in our direction, or we learn technical analysis, as I just said, and you may fall under this category. You learn technical analysis and you just expect to be able to trade. A lot of traders do this. Don't feel like you're alone. Again, I've done it myself. But that's not the path to a consistently profitable trading career. If anything, that is the path to blowing an account. I know this from personal experience. So if that's the case, then what is the correct path to consistently profitable trading? If technical analysis isn't the answer, then what is? And that's what we're going to talk about in today's video. So go ahead and click that subscribe button down below the video. Click the like button for me to help out with the YouTube algorithm, and click the notification bell to make sure you're alerted when we come out with new videos. I'm gonna let the intro and disclaimer roll, and I'll be right back to teach you the proper way to become a consistently profitable trader. See you soon. Welcome back, traders. So at this point, we've established, right? Technical analysis is not everything, but technical analysis is something you will have to master. It is a small piece to this rather large puzzle that we call Forex trading, but it's not the only thing that you need. You see, technical analysis itself isn't profitable because you know technical analysis. What can be profitable though? So what we're gonna dive into right now. The first step of becoming a consistently profitable trader is to create consistency, right? Consistency is in the word consistently profitable trader. So how do we create consistency in our trading? Well, we trade in a consistent way. And the way we do that is by creating what is called a strategy or a system. This strategy or system is nothing more than a set of rules that you follow every time you place a trade. I can still remember the first time I did this. I was consistently losing money. As I told you before, it blew a couple accounts, and I took a course from a guy. It was actually about stock trading. It's not around anymore, so don't ask what it is. I can't even remember the name of it. But I remember him talking about consistency in trading and how creating something with a set of rules was the only way to have consistent trading. Have consistency at all in your trading is you had rules that you followed. So I created my own set of rules. I tested them in the Forex market. I validated those rules in historical data. And about a month later was the first month that I had consistent profits. Throughout a full calendar month, 30 days, 20 some odd trading days, I was profitable by the end of it. That was the first time it had ever happened. And I blame a huge part of that on me having a consistent set of rules that I followed, a consistent strategy. So what we do in order to create these rules is take that technical analysis that you've now mastered. Let's say you're to the point where you know everything there is to know about technical analysis. Take your favorite parts of what you know about technical analysis and combine them together to create a strategy. Create some rules. I only trade when the market's above the 20-period moving average. I only trade when I see a hammer candlestick. I only trade when there's a double bottom that's above the 200 or a double top below the 200 moving average that has a red candle kicker, whatever it is. It's just a set of rules. And the beauty of this is you don't have to go out here and trust someone from YouTube that it's going to work. Once you have this set of rules, there's a process called backtesting of testing every time that set of rules has happened in historical data and seeing if that created a profit in the past. If it didn't, scrap it or optimize it, because there's no reason to trust something that hasn't made money in the last 100 trades that's happened based on that strategy or that set of rules, right? And if it has made money, if you're comfortable with it, then continue either the testing process, demo trading, or decide when you want to start trading it with live money. Optimize it, do whatever you would like. But that process itself is called backtesting. And that's the first step, create that strategy. Second step, backtest to validate that this strategy's made money. Now I have a full video on backtesting. I'll put it in the top right-hand corner of the screen so you can go over there and watch it. I actually also give a full strategy that's proven to give an edge over the market over the past year on the pound Swiss in that video. So check it out in the top right. You can leave this video running and you can come right back to it when you're done watching the backtesting video. But even backtesting is not the end. You're not done after that. There's a huge part of trading that has absolutely nothing to do with these charts that we're looking at right now. Nothing to do with them. And what part of trading is that? Well, it falls into something I've talked about multiple times on this channel. And if you've been watching me for a while, you've heard this before, but it's good to reiterate as much as possible. This, my friends, is what I call the triangle to trading success. In this triangle to trading success is profitable traders that have the life of their dreams, that big dream we all look for. They've made it. How did they make it? By mastering these three skills: the strategy that provides an edge of the market, which is what we just talked about, creating that strategy and backtesting it to validate that it's worked before. Then they've also mastered the second most important thing in our trading, which is risk management. You see, we all have this big dream, right? And this dream is incredibly difficult to accomplish if we're not risking a large amount of our capital. If you're not risking 5 to 10% per trade and you have a small account, it's gonna be hard for you to get anywhere, but that's a terrible idea. If you risk 5 to 10% of your account, you're going to lose that account. That account will go to zero, inevitably, especially if you aren't even good at trading yet. Even if you've mastered all technical analysis and you're risking that much, you will lose money. I've been guilty of this. I've lost money before because of poor risk management. And the reason people do this is because, like I said, we have this big dream. In most strategies, let's jump back up here to strategies. A really good strategy will win 55 to 60% of the time. Let's go on the high end. Say 60% of the time at a 1.5 to 1 risk reward. That is an incredible strategy. Let's say a swing trader. Some of the best swing traders I know make between 50 and 100% per year. And these are some of the best guys I know. A day trader, some of the best day traders I know make between 100 and 200% a year. These numbers do not change at all. The percent numbers don't change. The only thing that changes to make people more money is not the strategy or the risk management plan. It's the capital in your account. If you are starting with $1,000, the reason it's so hard, and I'm here to be honest, as I said before, I'm the honest trading coach. I'm doing all I can to give you the truth. I don't want to sit here and sell some type of dream. Forex is difficult, and if you're starting with small capital, it's even more difficult. If you have $1,000 and you find a strategy that wins 60% of the time at a 1.5 to 1 risk reward, and you make swing trading 100% a year, that means at the end of the year, your account's only going to be $2,000. And we all want to be able to quit. You want to quit that job, right? You want to buy that car. You want to live a lifestyle of freedom and go on vacations whenever you want to. And making 100% a year doesn't look appealing. Making $1,000 a year will not get that life. So what do? Well, instead of risking 1 to 2% per trade, we start risking 10% per trade. I can make $1,000 a month. Now we're getting closer. Now this is more of what I wanted. But what you don't understand yet with risk management, the more you're risking, the more you can lose. The faster you'll blow that account. So that's why it's so important to understand having the right kind of expectations when it comes to trading. If you're expecting to make $1,000 a month on a $1,000 account, I'm not one to say that anything's impossible, but people win the lottery too. You know what I mean? Like it's very, very, very unlikely that that's going to happen. Even with a decade of experience, I make nowhere near 100% a month. I don't know of anyone that has 10 to 20 years of experience that makes that much right now. No one. So the fact that you expect that, I'm sorry for the ads you've seen. I'm sorry that it sells you on the dream house, the dream car, and the easiest way to make money ever. But it's not reality. Again, people win the lottery too, right? But in this case, what we want to do is find a way to make consistent profits. And the path of making money, you can go get funded by, there's all kind of companies that do funding now. There's other ways to make money, but starting with a small account is going to be frustrating. The thing you need to realize is even if your account's small and it seems like you're not making a shitload of money, your risk does not need to change. You still need a solid risk management plan. This risk management plan is supposed to keep you from, one, blowing your account, two, from getting in your head and getting super emotional about every trade. If you jump in a trade and no one likes losing money. Let me start with that. Not even me. I hate losing money. No one likes to lose money. But if you are so uncomfortable with the amount of money you're going to lose in a trade that you jump out of your trade early, or your palms start to sweat, or you start freaking out in any way, you're risking too much money on every trade you take. And you need to cut back on that risk until you're comfortable with the amount of money you're going to lose on a specific trade. That is what the risk management is there to do, is to keep you comfortable and to keep you consistent. Consistently profitable trading, you have to stay consistent. Having a strategy that has a set of rules, you can base all these rules on technical analysis, but they need to be a set of rules. Like I said before, double tops under a 200-day moving average, win prices under it, double bottoms above, whatever the set of rules is. Got a full strategy in the backtesting video that is a set of rules. Then staying consistent to this risk management plan. Because of this risk management plan, it'll be a lot easier to stay consistent to the strategy, but this is not the risk management plan. Let's do a 2% risk. That is going to put you on the path to a profitable trading career. The last thing we have to worry about on this correct path to a profitable trading career is just staying disciplined. As easy as that sounds, it's one of the hardest things to accomplish, and I understand that, but it's a lot easier to accomplish with a strategy that makes money over a long period of time and a risk management plan that makes money. Staying disciplined when you don't even know what you're doing is impossible. You can't stay disciplined to nothing. But if you can stay disciplined to a strategy that gives a consistent profit over time, and you can stay disciplined to a risk management plan that keeps you from getting hyper emotional during trades and also keeps you from blowing an account, then the inevitable end of that is a profitable trading career. So I hope that was helpful. If you want help on your path to a profitable trading career, then we do have a few spots available in the EAP training program at the top link in the description. I'll put some comments, YouTube comments from some recent graduates of that program in the program. You'll receive a full training course that will teach you the strategies that I use on a daily basis. We have a full risk management course and a full discipline course in there as well, along with a few bonuses. On top of that, you'll also be receiving 3 to 5 email alerts of trades I'm taking based on the strategies you learn in the full training course in the EAP training program. 3 to 5 email alerts each and every week, and also you'll have priority email, which means that I will answer any trading related questions that you have or any questions you have about the course. I'll be answering those personally and getting back to you in a timely manner. If that sounds like something you're interested in, click the button right below the screen in the description. It's the top link. If not, totally fine too. Just make sure you do click the little red button to stay subscribed. If not, I will miss you. And I hope you'll miss me too. So click that little red button that says subscribe, click the notification bell, click the like button to help out with the YouTube algorithm. Comment if you have any questions. The first 10 comments I will answer, and comment on some ideas you have for next videos. What do you need help with? Let me know. I'll throw it into the next one, and I will talk to you guys very soon. See ya.